Welcome to the Traders Help Desk online video collection. In this video, I'm going to go through the basics of what it takes to set up a trading business. And this is part of the presentations that I do on my seminars. So if you are interested, please visit our website at www.TradersHelpDesk.com. Now, most new traders, when they come into trading, they go through the actions of choosing a platform, a broker. They normally follow the markets that are recommended by others. Of course, they buy indicators and then more indicators and even more indicators. They may attend seminars and more seminars and more seminars. This is the typical progression. They typically expect to recoup their money very quickly with little to no experience. They expect their tools or indicators to make all of the money for them. They do not expect an extensive learning curve. They constantly change their time frames, their indicators, and their markets, thinking that this is what's making them lose money. And the result is that they lose money, then they lose more money, then they lose even more money. Why? Because they are not consistent in their time frames, their methodology, or their markets. Now, let's look at a typical new business owner in any other business besides trading. First, they'll research the business, they'll spend time learning that particular business, and then they set up a business plan that includes identifying their customer base, choosing a location, they set their business hours, they identify their equipment, the budgets, and then they write policies and procedures to follow to get them to their goal. They track their sales and losses daily, weekly, and monthly. They add tools and expand their knowledge as their sales increases. They do not expect to recoup their investment overnight, but they do expect to make money in the long run. Do you have what it takes to be a trader? Can you be consistent in a methodology? Are you a confident person? A positive thinker? Are you an independent business person versus a dependent business person? Now, what this means is an independent business owner will go out and open up their own shop and they think for themselves, whereas a dependent business owner is more like a franchise owner. They expect the franchise to actually dictate a lot of their policies and procedures. Are you a professional? Can you leave everything else outside of your office? Come into the office only with your policies and procedures and perform those only without any thoughts to the stresses of the outside world. Do you have the discipline to be consistent in your methodology? Do you have passion? It's nice to go into a field, but if you really don't have a passion for it, typically you will not be able to make it. And do you have the ability to say no to a trade, knowing that another one will come along? Now, the first thing that you do when you go into the business of trading is you set up a budget. Now, your trading platform ranges anywhere from $60 a month to $300 a month with data feed. Some brokers actually provide free data if you trade with them. Okay, then you have the cost of the internet, the phone, electricity, the tools or indicators that you're going to use, as well as your educational needs. Now, because you are a new trader, you cannot expect to have a 70% accuracy rate. So let's make the numbers work for us. We're new, so let's just anticipate a 30% success rate. And as you can see, by using a 2-to-1 reward to risk ratio, even at 30% on the long haul, you've only lost $50. If you get up to 40%, you've made $100. When you get to 50%, you have cleared $250. This is based on 10 trades using a $50 stop and a $100 profit target. Now let's presume that we have a trading account size of $5,000. We're going to multiply that by 2%, and the maximum risk we're going to have on any one trade is $100. Therefore, our profit target would be $200. Well, what would we trade to be able to make $200 on a trade? We look at the different markets. Now, as you can see, I've listed all of the currency futures in the indices as well as crude and yellow gold T-notes in the U.S. bonds. Now, the ones in green are the ones that would give me over $150 per contract. Now, this is taking 10% of the long-term range as our profit target. So as you can see, the one that stands out is crude. I personally do not trade crude because it is very volatile. However, if you notice, we could trade the euro. It gives us $187.50. That is a 15-tick profit target. The stop would be 8 ticks, which is $100. Now, you could probably take 200 out of this because of the rounding function that's in the indicator is coming up as 187.50. We could also trade the Japanese yen. That's 150. That's a 12-tick profit target. Our stop would be 75. That's under our $100 mark. And the tick value is 6 ticks. And that's the way that a new trader needs to sit down and think about his process.